Good day, I'm Russell Eastaugh from Regan Bunroy, the African tax lead, and I'm going to talk about a number of different tax issues affecting companies across Africa in a series of talks, and this is one of that series. So, managing tax audits, that's today's subject, and people say to me, if I'm going to be investing in operating in Africa, am I going to suffer tax audits by the tax authorities? And the answer is, I'm afraid, yes. And my experience is there's a lot less of the focused risk approach to audits that you might get in, say, the UK, or certainly did in my days in the HMRC. And it's a pretty much we'll audit everything every year, maybe bunch some years together. So yes, if you've got a company in Africa, you're operating in Africa, you will be audited. And it may be quite hostile and aggressive. The tax authorities can be remarkably well informed and competent, not all the time, but a lot of the time, especially when you don't want them to be. And yes, you will face tax audits. So if you know you're going to face a tax audit, how can you prepare for it? How can you reduce the risks? And I think there's a number of possibilities. One is to have a good idea of your records and make sure they are properly kept, that you can find the piece of paper, the documents, electronic pieces of paper probably, that support your numbers. And that is not just the numbers that start off in the TB, but also the adjustments that get made along the line, and how you get to your final financial statements and tax return. I think one of the things then, as well as being prepared with having documents and understanding them, is doing some basic controls. So it's a good idea perhaps to do an effective tax rate comp is always a good idea, and a cash tax rate comp perhaps doesn't hurt. A deferred tax proof I think is always a good idea. But a fundamental one that tax authorities love is reconciling your turnover in your accounts and in your income tax return to the turnover in the VAT returns for the similar period. Now, it'll never be quite the same, but there should be some explanation for why they're different. Otherwise, tax authorities will come along and say, well, this number's bigger, we're going to take the worst possible interpretation of it, and you're going to pay. Make sure you've got sufficient and correct documentation to support all the expenses. Tax authorities are not noted for their merciful behaviour. You don't want to be on their mercy. If they come along and say, I want to see this, something, evidence supporting that number, a nice set of words explaining why it is and how right it is may not pass muster. They may say, no, that's all right and good, but show us a document. Show us some proof, not a nice warm feeling. So yeah, watch out for that one. Get the records, get them under control. Make sure you've got them, make sure you can find them, make sure that under the control of the company and not somebody else. And if it's an individual, then they're held safely within the company's document management system, not on somebody's personal email, which then disappears when he leaves the company or goes on leave or something. So that's, I think, is all good, sensible planning. And then, file returns on time, file transfer pricing returns on time as well, if they're different. And not filing on return just sets up a bad flavour with the tax authority. They'll start thinking, what are they up to? Do they know what they're doing? And you come to their attention for reasons you don't want to come to their attention for. You want to make things as quiet as possible, I think. And so filing on time is a good plan, as well as then you don't get interest and penalties for things you shouldn't have. Try not to make mistakes, because then they do wonder if you don't know what you're doing, and they tend to assume the worst of it again. So there are times when that can't be avoided, but then make sure there's good reasons and explanations, and if necessary, make a quick confession of them, depending which way it's going. Don't make constant losses. That's another problem, a red flag to the tax authorities. Constant losses, they will say, well, why would they be in business? Why would somebody be in business and keep making losses? They're supposed to be making profits. So where are the profits? Are they being disguised from us, or are they being put offshore? Where are they? What is going on? And again, they're not likely to be too philanthropic about it or understanding. They'll be saying, well, we don't believe it. So make sure you've got the evidence to show why you're right and they're not. I alluded to it earlier. Keep a copy of your returns and all the correspondence. Keep it with the company. Consultants can keep things, but they should have copies, or you should have copies, somebody should have, and you should have access to your profile with the tax authority as well. Otherwise, you're storing up problems for yourself, I would say. So what else can you do to reduce risks or make it as easy as possible? I think one of the things is to know your risks, keep a risk register, and socialize that with your colleagues, so they have some idea also what the risks are and what can come up. And then jointly you'll decide which are the ones you've got to make them less risky, how you can mitigate that. Maybe you have to change your practice on something. and what can something be done about it, or is it just a time bomb that's going to come along and tick and go bang one day and everybody's waiting for it, but you can't do much about it. You try and get things right, or better right, more right going forward. I think, yeah, so then the audit starts. So now what do you do? I think one thing you do is don't panic and be prepared to what I mentioned earlier. But then having said that, what else can we do? Somebody should take responsibility for the audit. I think somebody in the company. Tax consultants can help, but they are consultants. The job of the company is to manage its own affairs and take interest and responsibility for them. So somebody should take responsibility. Maybe it's the tax department or the tax director or whatever, and maybe it's the in-country finance lead. In certain cases, it may even be somebody else, such as legal, but somebody's got to take responsibility, and that should be documented and known. So then they can take a lead on managing that audit with all the different participants required. Then think about, do you need a consultant? If so, what kind of consultant? Should it be the ordinary one you use, or is this something special? Does it go beyond? So I think, yeah, make sure you've got the right consultant for the right job and the right method of paying them so they do a decent job and without costing you an unnecessarily large amount of money, and that they stay interested in the job and make sure it comes to completion and gets finished reasonably satisfactorily. So you don't want to lose interest. You don't want them to be incentivized to push you to giving up too early, or indeed too late, if it's just not really effective to keep going. So I think that's part of the thing. Identify who's going to run the thing, whose role is to do what. And the consultants, how do you pay them? Fixed price, contingent fee, by the hour, some combination, and there could be all sorts of different answers. I tend to think you break it down into tasks and come up with a suitable price for that task, and then you go to the next task. When it comes to the next piece of correspondence, perhaps, and you start again. So yeah, that's how you start de-risking the thing and getting it dealt with. I think try to keep the deadlines in answering the tax authorities' questions. They don't like being strung out. They don't like being taken non-seriously. Just treat them with some respect. That doesn't mean to say going down on bended knee, but it does mean, yeah, in some countries it's appropriate. Go into meetings with them with the right level of seniority of people, not too senior, not too lowly. Keep them overseas at the right time or something sufficiently large and complex, but not too early, because you don't want them to think you're running frayed. Yeah, go in the appropriate attire. I've seen that before in some countries. Everybody from the tax authority dressed in three-piece suits, and everybody from the taxpayer side dressed in casual shirts you'd use to do the gardening. It's not going to give a good impression. They're going to wonder what's going on. Are you people not treating them seriously? And they'll be unhappy about it. So try and watch out for that. And that's part of it, I think. Not to treat them with fear, but to treat them with respect. I think look for ways of getting a case settled. And people do come along and say to me, how do I get a case settled? And my answer is, well, it depends how much you want to settle it. You can always settle a case. Once the field work of an audit is over and they've started making assertions of this and that, you can always settle. You can say, yes, I agree with you. Here's a check. Now, that's not necessarily what you want to do. And I'll come to the point, perhaps I'll say it now. Be wary of pragmatic settlements that look pragmatic and sensible now. And you think, oh, well, I'll put a without prejudice and no precedent set thing writing on the top of the letter. But it doesn't work. It will be a precedent. It will be with prejudice. So watch out about long-term effects of what looks like a good idea now. But there are ways of unblocking cases. Can you negotiate something? We'll give up on this, you'll give up on that. Or say, look, let's separate this, we'll go into litigation on it. If necessary, let's deal with the rest of it. If you've got no case, then what can you do? You go and talk nicely, but ultimately you may have to pay and settle and watch the interest. Most countries are getting a bit sharper about charging you interest and perhaps even penalties on long outstanding tax bills. So sometimes it's a good idea to get them paid early. Other things to do, I think, yeah, keep your colleagues informed. I mentioned earlier about socializing, but keep people informed of the way it's going, especially when nasty news, unwelcome news, or potentially unwelcome news is coming up. One thing I do see is watching out for timelines. And I think I mentioned earlier, try to respond to the tax authorities' letters within time, or at least seek extensions of time when that's necessary, and give them bits of information as soon as you got them, rather than waiting until you got a whole letter worth necessarily if some things are taking longer, and explain what's going on so that they're not feeling they're being kept in the dark and not treated with due respect. But the other thing is tax authorities also miss deadlines. So if they've been auditing you for 6 years, which does happen, or they maybe started late, can they still assess? Because they may not be able to. And watch out for that one, because they may be thinking they can, but they may have to. There may be a piece of evidence or burden of proof on the tax authority to show why they can assess after a certain time frame has gone past. That's the one. But also watch out for objections. I've seen a lot of cases where people get what qualifies an assessment from the tax authority, don't object in time because they think, oh, well, I'm still negotiating, I'm still talking to the tax authority. Yeah, you're still talking, but talking and objecting are different. And what you'll find is you go on talking, and then you say you come to an agreement, and the tax authority says, oh, but you didn't object, so we can't do anything about it. And that's a bit embarrassing. So yeah, I'd rather object and get told, actually, no, that wasn't an assessment. And then you say, well, I'd rather have my back covered, thank you, than go the other way of being too brave about what an assessment is and then not being able to litigate the matter or even dispute it going forward. One of the things we've seen coming up across the continent is this idea of when you get to litigation, pay now, argue later. You have to pay a certain price for the right to litigate. That's a nuisance. I think it's obstruction of justice, but that's the law in a number of countries. I think the answer there is if the amounts are big enough, you've got to be a bit brave. If you think you've got a good case, you've got to come up with the money. It's no good trying to argue it informally because you didn't want to object at the time. Because I've seen this, and Tanzania is perhaps a good example of where this happens. Then, yeah, later the Tanzanian revenue authorities say, well, yeah, you may have a case, but we can't help you because you didn't object at the right time, you didn't appeal at the right time. So you've lost your right to participate in the discussion. Even if they've been continuing a discussion with you, it almost becomes an academic exercise, and you're better prepared for the future. So I think spot your losses where they are and get rid of them. There's no point crying over spilt milk, I suppose. If something's wrong, it's wrong, and get on with correcting it as best as you can. So look, there's no real easy answer to managing tax audits, but take an interest in them. Try and make sure they don't happen, or they will happen. Make sure they don't happen in a way that's undesirable or preventable. So you're well prepared for what's coming. You know what your affairs look like. You've got your records, and anything that you have a discussion with, you're well prepared for engaging on it and then trying to resolve. The other one is, yeah, watch out for amnesties and special rules for self-confession, as it were, or even for things which are arguably wrong, where there's a grey area in the law and a difference of interpretation. You may be able to persuade the tax authority they shouldn't impose the full penalties on you. That's always worth asking. So I think that's my thoughts on tax audits. Difficult area. Always happy to help discuss with people what they're experiencing, how they can perhaps devise a strategy for bringing the thing to a conclusion and as a more happy basis than perhaps would otherwise first appear. So that's my contribution on managing tax audits.